Hi everybody. In this video, we are going to learn how to find the balance in a T account and to use those ending balances to prepare a trial balance. We're going to use the transactions and T accounts in Chapter 3 of your textbook as a foundation for this video. Throughout Chapter 3, the textbook describes how to post debits and credits to T accounts for various transactions. We also talked about that in previous video lectures. The final T account balances for all of these transactions are shown in Figure 3.5 of your textbook. Here's Figure 3.5 from your textbook. Let's first look to see how they got the balances in these accounts. Remember that like signs add and opposite signs subtract. Looking at the cash account, you can see that the calculated debit balance of $111,350 was derived by first adding up all of the debits in the account. $83,000 plus $36,000 plus $6,000 equals $125,000. Then all of the credits were added together to total $13,650. $8,000 plus $650 plus $5,000 equals $13,650. Then, because opposite signs subtract, the $13,650 total of credits was subtracted from the $125,000 total of debits to then equal a debit balance in the account of $111,350. And we know this is a debit balance because the $125,000 in debits in the account is larger than the $13,650 of credits in the account. The same method has been applied to find the balances in each of the other accounts. For instance, the $11,000 debit in accounts receivable is greater than the $6,000 credit in accounts receivable, leaving a $5,000 debit balance in accounts receivable. The two credits posted to fees income are added together to total $47,000. There was no debit posted to the account, so the balance in fees income is $47,000 credit balance. The next step is to prepare a trial balance showing the debit and credit balances summarized in the T accounts. Figure 3.6 of your textbook shows the trial balance prepared for Eli's Consulting Services using the balances from each of the T accounts we just looked at. First, a trial balance has a 3-line heading. Eli's Consulting Services trial balance, December 31st, 20X1. Just as an aside, I like this book quite a bit, but there are a few things that I think they could have done better. A trial balance should show a period of time. We will use this trial balance to prepare financial statements for the company. Looking at this trial balance, it would be impossible to properly prepare an income statement. Was the $47,000 of fees earned in the month of December? Or was it earned for the year ended December 31st, 20X1? There's no way to tell from looking at this trial balance. So in the real world, you should always be sure that your trial balance has a period of time. Now, when we get to the financial statements, you'll see that they are preparing financial statements for the month ended. Therefore, I think it would be better to have Eli's Consulting Services trial balance for the month ended December 31st, 20X1. For purposes of this class, however, we're kind of stuck with the textbook, so we'll just have to follow the examples provided in the textbook. After the three-line heading, a trial balance should list all of their accounts with their debit or credit balances. Notice that a properly written trial balance follows the order of the accounting equation. Assets are listed first, followed by liabilities, then capital, then drawing, then income accounts, and last would be the expense accounts. Assets equals liabilities plus equity minus drawing plus income minus expenses. Each of these account titles and the balance in this trial balance came from the T account shown in figure 3.5. So for instance, cash is shown as having a debit balance of $111,350. That came from the T account. Cash, debit balance of $111,350. Accounts receivable, $5,000 debit balance. Accounts receivable, $5,000 debit balance. All the debits are posted in the debit column. All the credit balances are posted in the credit column. You can check all the other account titles and debit or credit amounts, but they are consistently done, and the trial balance has accurate numbers from the T accounts. After all the debit or credit balances have been recorded in the correct column for each account, you need to be sure that debits equal credits. So in this example, the debit column totals $150,500. Add up all those debit numbers, it's $150,500. And the credit column also equals $150,500. So the books are in balance. Debits equal credits. A trial balance that is not in balance indicates that there are one or more errors in recording business transactions, or posting transactions to the T accounts, or finding the balances in each T account, or perhaps transferring the balances from the T accounts to the trial balance. If your totals for the debit and credit columns are not the same, then there are errors that you will have to find before you can prepare the financial statements. After you are sure that your trial balance is in balance, then it's time to prepare financial statements for the company. You can look at the financial statements for Eli's consulting service in figure 3.7 of your textbook. It's just a page or two past the trial balance in figure 3.6. Please take a few minutes to trace the numbers from the trial balance in figure 3.6 to the financial statements in figure 3.7. Well, that's all for this video. See you next time.